What's up, everybody? Welcome to More Than Mortgage. I'm Chad Anderson. That guy is Zach Jones. You would think 63 episodes in, I'd get this right, and I still don't. All right, big news today or this week: Rocket. You all know them. Heard of Quicken? Same thing. Rocket Mortgage, Rocket Enterprises, Rocket whatever. Quicken Loans Arena, big thing up in Cleveland, Detroit area, all that good stuff. They have acquired Mr. Cooper. And so you've got, is it the nation's largest? I think it's the largest, right? Servicer in the country. And Rocket now combining with them. And this is real interesting, Zach. And this is what we're going to talk about for the next 7-8 minutes here is Rocket and Mr. Cooper. Are we, for the first time in a long time, seeing something that is somewhat becoming maybe a modern day Countrywide? And I don't mean stop all the housing crash crap before everybody just immediately goes there. I'm talking about the mortgage industry has become so fragmented since the crash, since the demise of Countrywide. The mortgage industry is beyond fragmented. There's not like one true individual leader. There's not just Coke and Pepsi, if you will. Like there's hundreds of mortgage companies who all have this tiny little bit of a share of the market. And now Rocket is starting to separate themselves. When it was on the decline, Wells Fargo was cemented in first place. Mm-hmm. They come down. Rocket has now built itself to that point. They acquire Mr. Cooper. Zach, a lot of people don't like Rocket, whether it's loan officers because you compete against them. If it's realtors because they're not local and you don't want to talk to somebody who's maybe not as experienced as your local person sitting in a cubicle somewhere. Some people just don't like their service. Some people don't like the way they do business, but you can't deny it that against all those, what you would call odds and people's perception of them, they're continuing to right now, it looks like at least, kind of take over the mortgage world a little bit more every single day because they also just grabbed Redfin a week or two ago.
Right. These are big moves in the industry. And, you may know the answer to this, Chad. I don't think that there's a mortgage company. I'm pretty sure there's a mortgage company. There's not a mortgage company that has 10% or more of the share of mortgages, market share in the country. I'm almost thinking that there's not a single company that has more than 5% of market share.
I thought Rocket did. I could be wrong. And we didn't spend hours prepping for this topic, by the way. Right. But I'll try to look it up real quick while you give your take on it.
It's very fragmented. So when you see these big moves with these big companies, so Rocket buys Redfin a week or two ago. Redfin is not valued very high. It was a less than $2 billion, which surprised me a little bit. But they've had problems. It's a model that kind of went untested. There's a lot of people that kind of don't like the model. You've got Rocket, who's got their own bruises and maybe a negative perception. Then you've got Redfin, who has their bruises and a negative perception about the quality of services that they provide, kind of trying to be the everything to everybody. And then you got Mr. Cooper, which is roundly disliked by clients and mortgage people and anybody who has ever done business with them. So what does Rocket do with this? I mean, are they just going to suck worse, or are they putting together a plan that's really going to take a significant market share and start doing what nobody has really been able to successfully do yet, which is to bring all of those real estate services in together for, agency representation, controlling the data in a digital marketplace, getting to the customer first, controlling the mortgage piece, and then also doing the mortgage servicing. The next thing will be the acquisition of an insurance company and maybe a national title name. Yeah. It's a lot. And nobody's been able to do it yet. And there's been a lot of failed attempts.
Yeah, it's really interesting because, and I'm looking for some of the data. The biggest thing I can find, or the easiest thing I can find, is top lenders by origination, which UWM, United Wholesale Mortgage, leads that. And this was more partly in 2024. This was from Q4. UWM number one, but only by 6,000 originations. It was
No.
UWM at 294,000. I'm rounding here. Rocket at 288, and then it falls off pretty drastically. Bank of America, Fairway Independent, and Cross Country come in at 345. So those are your originators. But so this is what I try to explain, though, if you're in the industry or if you're in real estate or if you're just a consumer and you start getting blown up by your current servicer, is this is where it comes in. Rocket sitting here originating 288,000 transactions, but now they also have the nation's largest servicing portfolio at their fingertips.
Mm-hmm.
So Mr. Cooper would think about that. Mr. Cooper, okay, was the largest servicer. But if you look on here, as far as the originations go, they were more about retaining servicing. They weren't out looking for new business. Now, they may try to grab it if it was low-hanging fruit, but they weren't out there every day like Zach and myself or other companies or other individuals or other brokers trying to grab a hold of market share. Mr. Cooper was servicing, and then if they got wind that you were going to try to refinance, they'd swoop in and try to snag you and offer you some great deal that they otherwise would not have offered you if you didn't put the pressure on them by shopping around your mortgage.
Right.
That's the whole game that a lot of the big servicers will play. Oh, wait, you're going to leave and go somewhere else? Hang on, because we would rather just refinance you now and eat it on the front end rather than you go somewhere else and get a good deal and then we have to buy servicing back from them at a later date.
Right.
That's kind of how that works. Now, Rocket, though, being able to be an originating machine the way that they are, and then also be able to tap in to the giant phone book of servicing that Mr. Cooper has, they're making a big play, and it's a little bit, I don't know, Zach, you and I have done shows before where we talk about the local realtor. Everybody always wants the local. But one thing that I've always said, and I didn't come up with this idea, I heard it from people much smarter than me, is that what happens in the day that maybe people don't trust necessarily Redfin, to run as their real estate agent or whatever. But what would ever happen if Apple came in and said, hey, Zach, you're an iPhone user, you're a MacBook user, you have an Apple TV, you have iCloud, you have all your photos with us, you got an Apple wallet, you got all these things. Hey, tap in real quick. Hey, you're qualified if you want, because we just looked at your bank statements and your spending habits based on the data we have. And by the way, you authorized us to look at this, whether you knew it or not. And we're going to qualify you right now. Average conventional rates are in the 6s. We've got 5.8 for you if you want to refinance your house.
And here's
because of the brand.
Right. And here's your assigned Apple realtor who only charges 1%.
Right. And it's more about, oh, well, I'll do it because Apple's so sexy and sleek and looks cool and everybody uses it. And Branding. I trust the brand. Yeah. So I'm going to do it because I trust the brand. Zillow has such a negative connotation to it from a value standpoint. Like everybody rolls their eyes at the Zestimate, right?
Right.
But if Rocket is building this brand where, hey, we're going to be a trusted brand. You pay us every month. We're good to you. We collect. We do all these things. You and I know the origination side of it ain't great. But if they start building this brand, that's what I've always said about Apple or an Amazon. If they got into this industry or field or sphere, I mean, maybe that's Rocket's angle. I don't know. That's just what I think is a possibility, is from the brand perspective. They build up enough trust that all of a sudden they start going to Rocket for everything.
Right. Well, and this is not just, doesn't affect just loan originators, because you got to put that Redfin model in there. So,
right.
Everybody who is a Mr. Cooper customer from a servicing standpoint, who has their mortgage with Mr. Cooper right now, is now a part of that Rocket biosphere or tech sphere. And
Right.
so they're going to be marketing, and Rocket is very, very good at marketing. Like you said, Mr. Cooper's kind of a rescue deal. Rocket is a very aggressive marketer. So they're going to be going after those people to talk about interest rates. They're going to be going after that book of business to talk about refinances. And then when it turns to, oh, well, I'm not going to refinance because I'm thinking about selling in the next year, then they're like, well, let's get you connected with our Rocket agent. All that Redfin group is coming over with Rocket, and they're going to be pulling purchases and buyer and listing representation out of that largest mortgage servicing portfolio in the same way that they're taking the mortgages away from the trusted local originator. So it's very interesting to see, are they going to be successful in pulling all of that business off? Can they pull some of it without pulling the other pieces? Again, it comes back down to relationships and our responsibilities as local experts to keep those relationships warm, and outdo the tech, because the tech's not going to. They're not going to be service. They're not going to beat us in the service arena. They're not going to beat us in the relationship arena or in the advice arena, because they're, at best, you're going to get a call center employee, during regular business hours, or a chat bot.
Yeah, chatbot. Yeah,
It's very difficult to see, but I also see consumer behavior is really changing in that arena. I say chatbot with disgust, but others rejoice when the little "Can I help you" pops up on the right hand side of the screen, because they don't have to talk to people. And we all know what direction that's going. For young folks who are more comfortable with tech than they are with real relationships.
Well, I'll just end with this. Guys, they're not spending this much money on a realtor platform and a mortgage servicer so that they can just keep status quo.
Right.
Moves are being made on the chessboard, and
they got a plan.
And it doesn't mean that they'll be successful. There have been plenty of acquisitions that didn't work out in the way that they thought. But I think a lot of times as originators, and I don't disagree with you at all. I think local is a big deal. I think a human is a big deal. I think people who have experience and can actually strategize like we do, rather than just, oh, here's your 30-year fixed rate quote and good luck. I think that is something that will always have a place. But at the same time, I think we'll let our egos feed into that here and there, and all of a sudden think as agents or as originators, sometimes we're immortal.
Right.
And that can't be the case. Like it's been attempted before. Zillow's been trying it, and companies aren't going to quit. Disruption is real. So that's the only thing I'll finish with, is that, hey, the immortality is not the case here. Be prepared, because you're going to have to fight back with some of this. They're not doing it just for fun. It's not Monopoly. They're doing it for a reason.
Agree 100%.
All right, so that'll do it. 63 episodes in the books. We may have another one next week for you. It's kind of been beaten up already, but we'll just kind of tease it or tag it with this, and then decide if it's worth a full show or not. But quit believing all the delinquency crap that you see on social media. Zach did a great reel on it this week. I'm doing one. It may be out by the time you watch this, but just don't believe the delinquency. That's all we can say, is that there is no housing crash. There is no housing crisis. Inflation is up. Credit card debt is up. Savings accounts are down. People are not going into foreclosure, though. It doesn't mean there's not one. It doesn't mean that there's not two more than there were last month. But we are so far from a crisis. It's not even a blip on the radar at the moment. So we'll leave you with that. All right. Socials up here, over there. Sorry, I screwed up again. YouTube, Instagram, Facebook, at Zach Jones Loans, Mortgage Dad Chad. Hit the channel, like, subscribe, the bell, download, share, comment. We appreciate all the interactions and everybody who's been a part of the channels. And also let Zach and I help you with your mortgages. So have a great week, and we'll talk to you again next week.
See you next time.